morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today I'm going to be talking about, the job report that came out on Friday, and what people are missing out. There's something that people are not checking out that's probably going to affect us investors down the line. I'm going to be talking about that today again. If you see me for the first time, I'm Peter Ads. Please subscribe to the channel, like, and put your comment down below. And also, I'm going to be talking about what I think about people saying Feds is already pivoting from here, because Jerome Powell came this week, last week on Wednesday. He came on Wednesday and was like, he had a chat, and people were understanding, and people were saying, well, I think Fed is gonna, be stopping from here and all that stuff. I'll be talking about Chinese zero COVID. What's gonna be the bull point and the thing we need to be looking at as an investor, the opportunities that are going to come out of it as an investor. I'm going to be talking about that today as well. So, some things you're going to need this week or next week rather, and this month that will probably give us Christmas rally, as Christmas time is coming. So I'm going to be talking about that in this less than 10-minute video. All right. Now, let's talk about the job report that came out. Market was expecting 200,000 jobs, right? And it came out 263,000 came out, and market went ballistic, right? Straight away, Nasdaq was down 2%, S&P 1.7%, and all that stuff. And people were saying, well, but this guy came the other week and said they're gonna be slowing and all that stuff, and what's going on? So that means the market is still strong. Well, this is what's happening, right? Market is still strong. Economy is still strong, despite what the Feds are doing to actually increase rates, because by raising rates, it's going to bring the market down. Sorry, the economy, not the market. It's going to bring the economy down, and that's going to slow the economy to some extent, because by increasing interest rate, which is what they call rate, interest rate going up, people will stop buying stuff. They'll stop using or reducing the way they use their credit card to purchase big items, right? But this thing is not been reflecting. Feds has already raised rates 75 basis points 4 times. That is, outrageous in there, because if you've seen it in history, we've not seen like 4 consecutive time where Feds comes out and raise rate by 75 basis for a point 4 times like that. So it's not actually reflecting now. That's one thing people are not understanding. It's not reflecting in the market now. It's going to start reflecting by 2023, and that's why I'm saying that people should be very careful. Don't think we're out of the wood yet. 2023 might be a year where we're going to have a rethink on what we're investing in 2022. Recession is there, it's still hanging. Mid next year, that's what the yield curve has projected. 18 to 24 months after the yield curve inverted, it's going to be recession, right? So it falls towards mid 2023. So that's what we're looking at in this place now. So if you're investing now, you better calm down and see what you are investing on, because at this point now, market went up straight away when Fed Jerome Powell came out and said, well, they're going to be slowing down all that stuff. And because of that, people start buying in and think, yes, that's it now. Market has hit the bottom. We have not hit the bottom yet. Don't be deceived. And if you're watching YouTubers that say, yeah, I think this is the bottom. No, this is not the bottom. And we still, because sometimes, you think this is the bottom, but nobody will know where the bottom is, because people are actually thinking, yeah, because that means if once Fed start pivoting, then that's it, that's the bottom, then markets start going to go up from there. No, you're wrong. That's not how it works. So I think the job report, the hourly actually rises by 5.1%, estimate what 4.6. I said before, market was expecting 200,000 jobs, payroll, but it actually went up. That means people are still getting jobs. Fed want the jobs to be cut. Fed want people to be laid off, but people are still getting that job. That's why what they're doing now is not reflecting in the job market, right? So hourly earning rises by 5.1%. 4.6 was estimated, that was expected, but now it beat the expectation. So Fed don't actually want to see, wages grow, but wages are growing day after day, and that's why he said, this guy. And anyway, before we move on to the next topic, I'll be talking about the CPI again. Is on the 13th of this month, right? That's going to be another issue that we need to be very careful with. So if it comes higher than expected, market is going to tank, and that's going to cancel our Christmas rally, right? But I think it's going to come out positive, and it should be good. Then on the 15th of this month, Feds are going to come out and tell us whether they are raising rate by 50 basis point or 75 basis point as reason for, what comes out on Friday, payroll and all that stuff. So we might have 75, we might have 50, but I think it's going to be 50 basis point. Let's talk about what Jerome Powell said on Wednesday briefly. So, he came out, he said, well, the economy, the Fed will not want to crash the economy. He spoke about the core growth, spoke about the housing and the wage growth. That, okay, this is what they're watching. These are the caveat. These are the things they're watching and looking closely. And these are the data they're watching. So from there, they're going to be actually slowing down the rate. And from there, we might have 50 basis points. And at this point now, so Fed is saying, well, they believe the inflation has peaked. That's what he said. He believed inflation has peaked. So from there on, they'll be slowing down the rate. And that's what the market heard and start jumping up from there. But on Friday, well, that got cancelled. So Jerome Powell said they don't want to over-tighten, and they know if they over-tighten, that means they will send the economy into a hard recession. And that's not what they want to do, because once they send the economy back to recession, they will have to come out and build the economy back again to start, softening and all that stuff. So they don't want to over-tighten. That's why he said they will be very careful from here now, while they're still continue raising rate. And some people believe they're going to continue raising rate until 2023. Some people even think they're going to go down until mid or late 2023. Well, I don't know how that's going to work out, but at this point, I think Fed are still going to continue raising rate closely. It might be, 50 basis point, but before they start stopping, a rate, they're going to have to go 75 to 50. So from after 50, we might see 25, but I don't see them stopping anytime soon. So let's quickly talk about what I said people are misunderstanding. Well, that's pivoting. The word pivoting. Everybody's just saying pivoting. When are they pivoting and all that stuff? See, this pivoting word is in threefold in front of the FOMC, in front of Feds, right? The first part is when they start slowing rates. Fed, Jerome Powell actually Wednesday said, well, they're going to start slowing down. And because, the market is actually showing, the CPI is showing that what they've been doing is actually working. But, well, job came out, it's not actually working, right? So that means the first part of pivoting is when the Fed starts slowing the rates. Okay, let's say we've been raising rate by 75, now let's go by 50 basis points. That's when they start talking about slowly reducing the rate. That's first pivoting, right? So the second one is when they are actually reducing the rate. Like, okay, now we've talked about slowing it down. Let's start reducing the rate from 75 to 50 basis points from there, right? So the third part is when they start cutting rate, because they need to cut rate. Because if not, even Elon Musk was saying on the other day on his Twitter, said the Feds need to start cutting rate now, because if not, he can see hard recession, deep recession 2023, and it's not going to be so nice. It's going to be so bad for everyone. Everyone will feel the pain of the recession if Fed don't start cutting rate now. But Fed ain't going to start cutting rate until 2024. That's what he said. 2024, towards mid 2024 or towards early 2024, that's when they're going to start cutting rate. But market believe by 2023 they're going to start cutting rate. So these are the three parts that comes with pivoting. So the first one they said that market start jumping up for is they talk about slowing the level they're raising the rate. So that's what so we still need to go two more. So when they start slowing it, they reduce it. After reducing, they need to start cutting those rates, because if they don't cut that rate and they leave it like that, it's going to destroy the economy. And, coming back out of recession, it's going to be so slow, and it's going to be like, prolonged recession, which is going to actually destroy everybody. So that's one thing about that. So people should understand that. So don't start investing that. Yeah, that's what I want to say. Don't start investing now. As for me, I'm not buying anything for now. I will let the Christmas rally just go up like that. Start, taking profit where I need to take profit. I'm not your financial advisor. I'm just telling you what I'm going to be doing, right? So I'll be taking profit, setting money aside for 2023, because 2023 is going to be the big deal for everyone, whether you're a small investor, big investor. you need to be very ready for the recession at this point. And that's what I'm going to say. Anyway, that's just what I'm going to say. So don't start jumping because you think market has hit the rock bottom. Now the next, place to go is up. No, that's not how it works. Be very careful. And that's what we see on Friday. That's what's happening. Any bad news comes out, the market starts shedding all the gains you've had in your portfolio. So now let's talk about zero COVID. We saw it on TV, what's going on in China, where people are protesting that they're tired of staying at home. Lockdown is not going to work. Zero COVID can never work. No way we're getting rid of COVID-19. COVID is not going anywhere. We've got to live with this thing and just survive around it. There's no way you're going to have a total economy without COVID-19. But Xi Jinping has said he wants zero COVID, but it's people now protesting and it's just going to be like exploding from there on. And with that, I think the government, the Chinese government are thinking, well, we don't want riot on the street. We don't want people to start waking up 1 billion people to go on the street and start protesting. It's not going to look good. Maybe we need to start slowing down on our zero COVID. So the good news that comes from China made Chinese stocks to go up last week. And from there, I think Chinese government, Xi Jinping government will be forced to cancel, zero COVID tolerance. And from there, guess what? Factories are going to open up again because we know China actually have 20% of production of world production. Most of the stuff you have in your house, in your office, everywhere you go is produced in China. So once Chinese people or Chinese government open up, then the bull market we've been waiting for, we have no choice. Market have no choice than to bring that bull run in again. So all eyes on China for the next step or for the next direction for the stock market. Guys, that's it for today. I'm going to see you on the next one. Subscribe for more information and I'll see you next time. Bye.